Hello there, Mavericks. Take a look at that date. It is July 1st. Half of the year is gone, so put those in the books and let's look forward to the rest of the year. In this session, we're going to go through the news of the day. There wasn't a whole lot. We're going to look at the movement in the market. There wasn't a lot. And we're going to take a look at potential trading and setups. And guess what? You heard it. There isn't a lot.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
When we take a look at the market, we did not see a lot of movement today. Let's start off with some of the news of the day. We heard from Chairman Powell today, and he actually said that the Fed would have already cut rates without the impending tariffs coming. The bond market is now down to 4.2%, and the stock market is liking that quite a bit. It looks like if there is a good resolution of the tariffs, then we are going to get a rate cut fairly quickly after it. And that's what the market is excited about resolution of tariffs, which means maybe a rate cut or two this year. Very bullish for the market. We also heard from the Eurozone CPI, came in as expected at 2.3%. That didn't really move the euro any, even though the euro's been strong, didn't really move it. And we also got US ISM manufacturing. It rose from 48.5 up to 49. Anything below 50 is recessionary, so still not a great number, but it is an improvement over where it was. What did that mean for the world of currencies? Well, not much. I really just want to point out, 5 currencies virtually did nothing today. If you were trading in any one of these, you could have made a little money, but there wasn't any big money to be made. I continue to like dollar-yen for a trading pair. All I mean by that is there's not a great trend on it, but there's a big range. So whenever you're taking a look at trading, and if you are a trend trader and you're not seeing any big trends, you really need to either sit on your hands or really try to pick what pairing has the biggest moves on a daily basis. And that tells you where to go hunt, which means that you're going to be buying at support, selling at resistance, doing a little bit of, it's not reversal trading because it's not in a trend, but this is where the market is. So I continue to like dollar yen as just a pure trading vehicle. We'll take a look at it on a chart. We can go long, we can go short. It doesn't matter. We're just looking at it as a trading vehicle. The CAD was the worst performer for the day, so CAD yen would have been the best trade you could have been in. But we'll take a look at those charts. There really wasn't any big reason to be short CAD yen going into the overnight session. So one of those moves you probably just couldn't catch. We take a look over at the equity markets. They were down slightly. The S&P, the world index flat. Crypto down 1.4%. That's zero. Oil and gold up for 1%. And if we take a look at what happened in the crypto space, we can see that Bitcoin Cash continues to show outperformance. This is where the outperformance has been. Underperformance has been in Litecoin, for sure. Bitcoin is just kind of hanging in its range, trading from, let's call it 104 up to 108. That's where we are, and we're now smack dab in the middle of that range. I'm not too excited about trading in Bitcoin at all here. Let's take a look at equities. Equities are a +3 market. And I really just want to point out, after this big run, we get a big run. It's pretty typical to get a sell-off, either a pullback or a base. But look at this candle today. That's not a selling candle. It gapped down and people bought the gap down, telling you that the buyers are still there in the market. Yes, we could go all the way down to 6,100, 6,150 and still be totally fine on a technical basis. I mean, that's only like a 0.7, 0.8% pullback. Really, there's nothing to worry about here in equities because the market's in a really sweet spot here. It's anticipating that we are going to have some resolutions and some trade deals done in tariffs, They're looking forward to those Fed rate cuts. And what's going to happen is the economic numbers aren't going to matter in the past. Let me tell you what I mean by that. We see that the economy has actually been slowing over the last month. And it's been slowing because of, again, the anticipation about the tariffs, people not making big decisions, waiting to see what happens. If we get resolution, the positive bounce in the economy won't show up till probably September or October. There's a lagging effect. If we get resolution, people are going to totally throw out this slowing economy and say, hey, you know what? We don't care about bad numbers in the short term because we finally have this resolution to this big deal. That's why I think this market likely just holds on and continues to move a little bit higher. There is very little on the schedule over the next 24 hours. We have Aussie retail sales and we have ADP employment out of the US. Neither one of these is going to be that big of a mover. So I don't think there's going to be any big surges over the next 24 hours from a news event. Let's go take a look at the velocity scores here on some currencies and see if we can find where to go hunt. Let's first pop into Bitcoin Cash. Bitcoin Cash is the only crypto that looks decent here. You can see we broke out of this 500, 505 area. We made a nice new high and we're pulling back. This is a bull pullback. This is a very good technical pattern. And it tells you want to be looking for some buying in between this 510 to 511. We don't want to just buy it. We want to see a positive reversal candle, like a hammer candle would be a great little reversal candle. Something followed by some momentum to the upside that tells us, oh, okay, the buyers are now back. We can now be long. At this point, it's still falling. I'm anticipating it bounces here, but that doesn't mean it's going to bounce here. I used to get in early because the anticipation killed me. And I said, what if I wait too long and I miss it? And so I would get in early. And then what happened is it didn't ever bounce and it plunges through 505. It knocks out my stop, bottoms out at 495 and then takes off. And next thing I know, it's back up to 530. And I lost money on that trade. Losing money on a trade that you're right on it sucks. So I really, really dislike to lose money on trades I'm right on, especially because of patience and following proper principles. So Bitcoin Cash is pulling back right now. It could be a buy in the next 24 hours, but at this point, I've got to see the candles to prove it. Let's go to yen. Yen, look at this. Yen is neutral. Let's take a look at dollar. Dollar is falling here. And we did get this nice little bear rally here. I love these little bear rallies on dollar crosses. So we went all the way down, came up. So you can see failed here, turning over. So I do like dollar short. Question is, what do I like it against? Yen was so-so, but take a look at yen. Yen has rising EMAs, rising RSI. It doesn't look great, but it's something. This has been the pair that has had the biggest ranges. We'll take a look at this pair here in just a second. Swiss franc is strong, but at the moment here, in the last 24 hours, well, really the last 48 hours, it's been stuck here. So this is where we look for, okay, what's going to break it out to the upside? If we had some news, if we had some sort of catalyst, we could say, hey, we think it's going to happen in the next 24 hours. The problem is we don't have any catalyst. We don't have any reason to believe it's going to happen until it happens, which means we just have to sit and react to it. The euro looks much, much better. Take a look at this. We are now pushing up to the high end of the range. Euro here to me looks like the best. Let's go through all the rest. Pound. Pound is falling, but not falling very fast. CAD looks like the dollar, weak as well. Aussie neutral, Kiwi neutral. So here is our velocity scoreboard, and we said, hey, euro looks the best, and CAD and dollar look the worst. Now that being said, remember, I'm going to take a look at dollar yen, and that's going to be the first trade we take a look at because I like the amount they're moving against each other. But it's range bound. So it tells me that just because dollar's been weak over the last 24 hours, I actually probably want to look for it to be strong against the yen. So let's take a look at the chart. Before we start with dollar yen, let's start with where we should start. Euro US dollar. That's right now the best pairing out there. The euro was the strongest, dollar was the weakest, along with the CAD. So either euro dollar or euro CAD is really where you should start. And you can see we've got this nice little bull pullback that we had here. Got some buying here. We just broke above the parabolic SAR. RSI looks okay. This trade looks okay. Big question is it really going to break out? Because I see this range here. I see this range, and this is where it's tough as a forex trader because we see these setups all the time. And this is a decent setup here, but we have no idea when this is going to break out. It could sit in this base here for another 2 to 3 days. And there's probably going to be a move back down to the bottom of that range. And if your stop is anywhere in here, you're probably going to get knocked out for a loss. This is where it's tough to where you want to take positions, but you understand you don't know if you're going to get the breakout or the false breakout. This is where I love half positions, third positions. Take a half position here. Take a half position here. Have a wide stop, maybe all the way down here, like 117.20. Really, really wide stop. Take a third of a position. And then if we start to move higher, then you say, oh, you know what? Let me grab a little bit more here on the breakout of 118.20. Then I move my stop up to a really tight area where I want it to be really controlled. And if it does break out and runs, it's great. But if right here, let's say it fizzles and fails and backs down to 117.80, and then it comes down to the bottom of this range at 117.6, and then it starts to bounce, I can grab my second half at a better price. And now I got a better price. I move my stop up. It's just a much better trade. So again, half positions in markets like this, I think is the right place to go. It gives you the ability to really sit through some of the BS. All right, let me go over to dollar yen. Dollar yen has been moving its way lower. We have a nice bear rally here. I like this setup. I actually like this setup probably better than the euro one because we've had this big rally here. So we rallied from, let's call it 142.70 all the way up to 143.70. So 100 pips rally. We're basically 30 pips off that high. If this thing makes a new low, this is going to be a decent trade. First target should be here at 142.70. The only thing we're really waiting for is that trigger saying it's now. It's time to get into it now. And what we don't have is exactly that trigger. We've got RSI that's just flat as could be, actually rising a little bit. We're not through the parabolic SAR yet. Just a little bit early here. Ultimately, this thing should not go up above that 143.80. That would be where I would cut and run on this if I did take a position. Now, I hope you heard me say if I do take a position, because I'm not intending to take a position. These aren't great setups. These aren't great trades. And I've been trading long enough, and I've had lots of times where I was impatient, clicked the button, and I almost always regretted it. I'm now older and wiser, and I can sit on my hands. This is probably time to sit on your hands and just sit it out. As we say at Maverick, trade the market in front of you. The market in front of us is pretty lean at the moment. So we can wait and come back when it's a little bit better. Thanks for joining me. Goodbye, everyone.